All right, welcome to our latest Market Pulse. We're going to break down everything you need to know right now. The US economy? It's growing, but there are some whispers of a recession down the road. Gold is sitting at a huge historic moment. And crypto? Well, crypto's trying to make a comeback. Let's get into what it all means for you. So let's dive right in. The big question on every investor's mind is always, what's next? In this explainer, we're going to tackle three key areas. First, we'll look at the kind of puzzling strength of the US market. Then we'll zoom in on a real make-or-break moment for gold. And finally, we'll navigate the wild world of crypto to see where the real opportunities are hiding. Okay, first up, let's talk about the engine of the global economy, the US market. And right now, that engine is running way hotter than anyone really expected. It's creating this fascinating puzzle that, honestly, every single one of us needs to try and solve. And here's the core conflict in a nutshell. On one hand, the economy is growing much, much faster than anyone predicted. But on the other hand, you've got these money supply models that are flashing a warning sign, a potential recession in 2026. So the real question is, how do you invest today when the short term looks fantastic, but there are these long-term risks just kind of bubbling under the surface? Well, the key takeaway for now is actually pretty simple. You trade the trend you can see, not the one you might be afraid of. While that 2026 question is definitely out there, the immediate trend in the US stock market is undeniably strong. And with zero technical signs of a breakdown, the strategy right now is to stay bullish. And if we look a little closer, you can see that strength just about everywhere. The S&P 500 is holding firm, and the Nasdaq is actually outperforming. All those fears about a weak August, they turned out to be nothing. And September might just surprise everyone too. So the bottom line is this. The uptrend is intact, so the core strategy is to stick with it. Now, let's switch gears. We're going to pivot from the broad market to a single asset that could be at its most critical point in years. Seriously, we are talking about gold, and it has arrived at a truly historic crossroads. This is the number. 3,400, and I want you to burn this number into your brain. This isn't just another price level. For gold, this is a massive multi-year resistance point. Think of it like a giant ceiling that has been practically unbreakable time and time again. And the history behind that number is exactly what makes this moment so incredibly tense. In the past, gold has managed to poke its head above 3,400, but it has never, not once, held that level for more than a single day. And right now, it's testing that exact same ceiling again. A sustained break above it, that wouldn't just be a new high. It could signal a whole new world for the metal. So how in the world do you play a moment this critical? Well, a smart tactical strategy is to manage your risk instead of just betting the farm on a breakout. You could consider a 50-50 approach. You buy half of your position now just to get in the game. If the breakout actually holds, great, you add the rest. But if it fails, you've still got capital left to buy the dip, which lowers your average cost. It's just a really disciplined way to navigate a high-stakes moment like this. Of course, you can't really talk about gold without mentioning its, let's call it, volatile cousin, silver. And right now, silver is showing its own signs of bullish momentum, and it's definitely living up to its very distinct reputation. And there's a reason they call it the devil's metal. Silver can just sit there, do nothing for months, and then suddenly explode, or totally collapse with almost zero warning. Trying to time those moves is just notoriously difficult, which is why a lot of traders just prefer a simple buy and hold approach with this one. So looking at the technicals, the outlook is pretty constructive. The recommendation is to buy. The first hurdle you're going to want to watch is that previous peak, right around 39.5. Now, if silver can clear that, the primary target is sitting way up at 43. So the potential is there, for sure, but just remember it's a nickname. Okay, for our final topic, let's jump into the digital frontier. The crypto market has been shaken up recently by some really large whale sales that caused a ton of volatility. But now it looks like the market is trying to find its footing and maybe even stage a comeback. So here's the really key insight. While those big whale sales definitely rattled people's confidence, the underlying quantitative models, they're still bullish. They're still suggesting a new peak could be in the cards. Really, the only thing missing right now is confidence. The market is just waiting for a clear sign that the selling is over, and there are some specific price levels that could be the trigger. And here they are. These are those key levels to watch. For Bitcoin, the strategy is to hold or maybe consider buying above $11,450. For Ethereum, which has been looking particularly strong, by the way, the buy signal is a break above 4,700. And for Ripple, a move above 3.06 would be a really positive sign. So keep a close eye on these specific numbers because they could signal that the bulls are back in town. And that leaves us with three pretty distinct stories to think about. Do you ride the short-term strength of the US market, even with those long-term questions? Do you take a shot on gold at this historic tipping point? Or do you see the biggest opportunity in a crypto market that's just trying to get its confidence back? The key question really is, which one of these stories is going to define your portfolio's future? And that's all for this market update. Hey, thanks so much for joining us. We really do appreciate your subscription and likes. They help us keep making this content for you. We'll see you in the next one.